You will learn the true role of capital in society and the game theory of capitalism, that is who gets what, when and how, not just as a financial input but as a force of directional power, a moral decision system and a shaper of the future. Most people think capital is just about money. Capital allocators know better. Capital is how civilization evolves or collapses. Whether you run a fund, manage a family office, or are building your own portfolio, this episode is for capital allocators who care about impact, alpha, and history. Let's get into it. Let's start by correcting the biggest misconception. Capital is not cash. Capital is convertible trust. It is the ability to move resources, shape human behavior, set priorities for progress. In primitive societies, capital was stored in land, labor, livestock. Today it is data, energy, equity, ownership, control systems. Capital is not passive. It is active intelligence. It determines what gets built, who gets funded, which ideas live or die. Capital allocators are editors of reality. Think about that. The flow of capital writes the story of civilization. Where capital flows, innovation blooms. Where it exits, decay sets in. When we invest in defense and space, we build security and exploration. Biotech, we extend life and cure diseases. Energy resilience, we stabilize civilizations. Media and content, we shape culture and perception. Every allocation is a vote for what the future should be. Bad allocations lead to bubbles, fraud, or stagnation. Good allocations multiply value, progress, and trust. So if you manage capital, you are not just chasing returns, you are choosing which part of society evolves. And that comes with responsibility. Let's get deeper. Capital in society performs three core functions. Capital as a signal. Capital tells the market what to pay attention to. When AI gets billions in capital, it signals priority. When climate tech or defense gets funded, society pivots. Capital is algorithmic language which moves faster than policy. Your decisions are louder than any speech. Capital as insurance against fragility. Capital doesn't just fuel growth, it protects against system collapse. In pandemics, capital backs vaccine R&D. In geopolitical shifts, it backs resilient infrastructure. In market crashes, it restores liquidity and confidence. Well deployed capital is civilizational armor. Capital as the architecture of opportunity. Proper capital allocation creates new on-ramps for innovation. Early stage VC unlocks entrepreneurs. Credit funds unlock real estate development. Sovereign wealth shapes national resilience. Capital is what connects ambition to execution. It enables the builders, the scientists, and the risk takers to go from whiteboard to reality. And the capital allocator is the architect. If you're managing money, whether $10 million or $10 billion, here is what this means. Don't just chase yield. Chase purpose-driven efficiency. Look, high returns are necessary, but returns without meaning lead to decay. Allocate where the real economy is evolving. This decade is about energy security, aerospace and defense, predictive systems, that is AI plus data, biotech and agent, private credit and debt sovereignty, media and mindshare. This is where capital creates asymmetric alpha and asymmetric impact. Embrace the role of a storyteller in capital, because where you allocate, others follow. And capital alone doesn't move society. Narratives do. Your allocation is a signal, a bet, a story. Own it with clarity and courage. Now, to the game theory of capitalism, that is who gets what, when, and how. Capitalism is often described as a free market, a meritocracy, or a machine But in reality, it is a game of power, timing, and strategy, where the winners don't just play hard, they play smart. You have to know the game theory of capitalism, who gets what, when, and how. If you are an investor, builder, or capital allocator, this will change the way you see the system. Let's play. Most people treat capitalism like a vending machine. Work hard, get paid, invest, grow wealth. But behind the scenes, it operates like a multiplayer, high-stakes game governed by imperfect information, asymmetric power, and strategic behavior. Enter game theory, the science of decision-making in competitive and cooperative environments. Let's define the rules. Players equals individuals, companies, governments, investors. Resources equals capital, labor, data, time, influence. Goals equals profit, security, legacy, dominance. Moves equals lobbying, investing, pricing, innovating, storytelling. But here's the kicker. The game doesn't reset. Every move changes the board. And the best players don't just play to win today. They shape the rules, the timing, and who even gets to play. Let's start with the most fundamental question. That is, who gets what? The answer lies in power laws, not equality. In capitalism, wealth follows a non-linear pattern. The top 20% control 80% of resources. Top 1% shape global systems. Top 0.01% often write the rules. Why? Because of feedback loop. Money makes more money. Influence attracts opportunity. Early access compounds advantage. This isn't failure, it is the structure of the game. But understanding this helps you stop complaining about unfairness and start learning to position yourself strategically. In any game, timing determines outcome. In capitalism, this is especially true. Let's break it down. First mover advantage. The early entrant captures narratives, customers, and capital. Late mover leverage. The imitator improves margins, avoids R&D, and captures efficiency. So which one is better? The answer depends on your resources and risk tolerance. Apple didn't invent the smartphone, they perfected it. Tesla entered the dead EV market and rewrote the timing curve. Early investors in AI made asymmetric bets before it was obvious. The best capitalists are not just builders, they are chess players studying timing windows. If you are early, you get rich. If you are late, you get used. So, how is the game actually won? Well, there are three real levels of advantage most people miss. Narrative. Capital flows toward conviction. That means the best story often wins, even before the best product. Elon Musk raised billions before profitability. Nations print money around national needs. Fund managers attract LPs with narrative alpha, not just spreadsheets. If you can frame the problem and the opportunity, you control attention and where money flows. Regulation. The best capitalists don't fight the rules, they influence them. Banks shape finance laws. Big tech shapes antitrust timelines. Energy giants lobby for tax advantages. Policy isn't neutral, it is part of the strategy. Sophisticated players use legal infrastructure as a barrier to entry, not a risk. Moats and leverage. Sustainable advantage comes from asymmetric leverage. Code that is infinite. Distribution, zero marginal cost. Media, mass influence at low cost. Capital, compound growth, acquisition ability. Data, predictive insight at scale. Smart players build systems that scale without them. They win because they understand the levels of exponential impact, not just effort. So, who gets what, when, and how in capitalism? Well, those who simply understand the game beneath the game. Capitalism rewards strategic timing, asymmetric moves, narrative dominance, system level leverage. It is not about playing harder, it is about playing smarter with power, foresight, and leverage. Capital isn't just a tool, it is a responsibility, and those who allocate it are rewriting history in real time. If you are a serious allocator, start thinking at the level of nations, civilizations, and centuries. That is the role where we are stepping into. This channel is for high agency capital thinkers. Subscribe for more videos breaking down capitalism, AI, investing, and billionaire strategy. Share this with a fund manager or allocator you respect. If you found this helpful, leave a comment below or leave some comments below. What is the next move you are making in the game? And where do you believe capital should go next?